Good morning, students. Myself, Dr. Lakshmipathy MG, working as a associate professor of Commerce, Government First Grade College, Koratagere. My title is Financial Accounting. Now I am discussing session number 5. The topic is Theoretical Framework of Accounting. Under this topic, I am discussing accounting standards, meaning, need, objectives, and significance of accounting standards. First, introduction to accounting standards. Accounting standards are written policy documents issued by expert accounting body or by government or other regulatory body, covering the aspects of recognition, treatment, measurement, presentation, and disclosure of accounting transaction and events in the financial statements. Financial statement provide inputs for most business and economic decisions. However, when these statements are not transparent and reliable, it could have huge negative impact on growth of business enterprises and economy at even large. Hence, it is essential to regulate the accounting process that helps preparing financial statements. In order to provide transparency, consistency, comparability, adequacy, and reliability of financial reporting, it is essential to standardize the accounting principles and policies. Accounting standards provides a framework and standard accounting policies so that the financial statements of different enterprises become comparable. Now, what is the meaning of accounting standard? Accounting standards are written policy documents issued by an expert accounting body or government or other regulatory body covering the aspects of recognition, treatment, measurement, presentation, and disclosure of accounting transactions and events in the financial statements. In accounting standards are written policy documents issued by expert accounting body or government. In short, an accounting standard may be regarded as art of law, a guide to action, a settled ground or basis of conduct or practice of accounting. What is the definition? Accounting standards are authoritative guidelines and rules for financial accounting and reporting. They ensure consistency, reliability, comparability, and transparency in the preparation and presentation of financial statements. What is the need for accounting standards? The stability of economic system depends upon the confidence that user groups have the fairness and reliability of the financial statements. It is the function of accounting standards to create this general sense of confidence by providing a structural framework within which credible financial statements can be produced. Accounting standards deals mainly with the system of financial measurement and disclosure used in producing a set of fairly presented financial statements. They can thought of as a system of measurement and disclosure rules. Accounting standards are also vitally important in resolving potential conflicts of financial interest among the various external groups that use and rely upon published financial statements. Such conflicts of interest are frequent and rare. So accounting standards reduces the accounting alternates in the preparation of financial statements within the bounds of nationality, thereby ensuring comparability of financial statements of different enterprises. Therefore, accounting standards can be seen as providing the important mechanism to help the resolution of potential financial conflicts of interest between the various important groups in society. So, what is the need of accounting standard? The first one is uniformity. It ensures financial statements are prepared in consistent manner. The second one is transparency. It increases the reliability of financial information. Comparability. It facilitates comparison across different organization and time periods. So compliance. It helps in complying with legal and regulatory requirements. So investors' confidence. It builds trust among investors and stakeholders. The next reading, objectives of accounting standards. Accounting standards standardize diverse accounting policies with a view to eliminate the non-comparability of financial statements and thereby improving the reliability of financial statements. The second one is provide a set of standards accounting policy, valuation norms and disclosure requirements. To make accounting principles used in India at par with internationally recognized standards. To adopt a uniform set of accounting principles for financial reporting. To create a single recognized framework of the accounting system. To make international companies understand Indian accounting practices. To ensure international companies understand Indian accounting practices. To ensure transparency in the financial statement of companies. To expand the scope of doing business globally. So, in briefly, one of the objectives of accounting standard to standardize accounting policies and practices, to eliminate variations in treatment of accounting transactions, to enhance the credibility of financial statements, to provide guidance to accountants and auditors, to ensure fair presentation of financial position and performance. So, next reading, what is the significance of accounting standards? So, accounting standards are written policy document issued by the recognized accounting bodies like ICAI in India, IASB globally, that guide how financial transaction and events should be recorded, reported, and disclosed. What are their significance? It includes the first one is uniformity in accounting practices. They ensure consistency in the methods of accounting, comparable financial statement across organization and periods becomes possible. The second one is reliability of financial statements. So standard ensures that financial statements present a true and fair view of the financial position and performance. Users, investors, creditors, regulator can rely on the information provided. Facilitates comparability, enables comparison of financial performance between different enterprises or over different periods. Useful for stakeholders making decisions, investors comparing companies. So, protect stakeholders' interest. Helps protect the interest of investors, creditors, and public by preventing manipulation of accounts. Reduces the scope of for window dressing and fraud. Assist in auditing. It provides a sound basis for auditors to verify and certify accounts. Reduces disputes between companies and auditors. It promotes international acceptance. It helps in harmonizing national accounting practices with international standards. Facilitates global investments and trade. So, basis for legal compliance. In many countries, including India, compliance with certain accounting standards is mandatory under law. Non-compliance can attract penalties. They should be useful. Another significance. They should be useful to investors in judging the yield and risk involved in alternate investments in different companies in different countries. Today, investors in the equity of any company may be from any part of the world. The standards enables public accountants, that is chartered accountants in India, to deal with their clients by providing rules of authority to which accountants have to adhere in their job preparing financial statements on true and fair basis. So accounting standard rise the standards of auditing itself. Government officials, tax authorities and others find accounting reports produced in accordance with established standards to be reliable and even acceptable. So financial statements produced will be reliable documents for the purpose of analysis and interpretation by the analyst, researchers and consultants for economic forecasting and planning also. And what are the procedures for issuing, setting accounting standards? The accounting standards boards has main role in frame the accounting standards. The standard setting procedures of accounting Standard Board can briefly outline it as follows. It determines the broad areas in which accounting standards has to be formulated. Study groups will be constituted by ASP. Draft of the proposed standard will normally include objective, scope, definition, recognition, and measurement and presentation, and finally disclosure. And revision, recall the what we discussed earlier. Accounting standards are essentials for ensuring consistency, transparency, and reliability in the financial statement of organization. The need for accounting standard arises from the requirement to bring uniformity in accounting practices and to prevent manipulation or misrepresentation of financial information. The objective of accounting standards are to standardize accounting policies, promote comparability of financial statement, protect stakeholder interest, and ensure that financial reports present a true and fair view of an organizational financial position. The significance of accounting standard lies in building trust among investors, creditors, regulator, and the public. They serve as a framework for fair reporting, enhance the credibility of financial data, and contribute the smooth functioning of capital markets by enabling informed decision making. In short, accounting standards play a vital role in achieving uniformity, accuracy, and accountability in financial reporting across the organization and industry. Dear students, these are the reference books for updating. I given books for reference. Thank you very much.